Oil skids on soaring U.S. inflation. A barrel still above $120. Oil prices skidded on Friday as U.S. inflation at more than 40-year highs recommended even extra competitive price hikes that sent the greenback flying, making commodities priced in the dollar, including crude, more expensive for non-holders of the Forex. But a barrel nonetheless held properly above $120, making sure a seventh directly weekly benefit for U.S. crude and a fourth weekly win in a row for international benchmark Brent. London-traded Brent settled down $1.06, or 0.9%, to $122.01 a barrel. For the week, although, it confirmed a benefit of 1.8% and become up 9% over a 4-week duration. On Wednesday, Brent hit $124.38, its maximum considering the fact that 14-year peaks of above $130 reached on March 9 after the invasion of Ukraine that triggered Western sanctions on Russian oil that upended the worldwide power market. The global crude benchmark is up 57% to date for this year. West Texas Intermediate settled down 84 cents, or 0.7%, at $120.67 in keeping with barrel, after a 3-month high of $123.15 on Wednesday. For the week, America crude benchmark rose 1.8% and changed into up 18% over a 7-week length. Year-to-date, WTI is up extra than 60%. Friday's slide in crude came because the dollar index, which pits the greenback in opposition to 6 different predominant currencies, hit a 3-week high of 104.23. The greenback jumped after the Labor Department stated that the U.S. Consumer Price Index grew 8.6% at some stage in the year to May, expanding via its quickest price since 1981, as the cost of truly the whole lot, from meals to gas, shelter and garb, rose once more closing month. The average pump price of gas, specifically, hit extra than $5 a gallon on Thursday for the first time ever in the United States, in keeping with statistics from fuel rate monitoring service GasBuddy. Separately, the University of Michigan stated its closely followed U.S. Consumer Sentiment Index hit a file low in its modern-day survey for June as Americans emerge as more and more disenchanted with inflation taking a bigger chunk in their paycheck every month. U.S. bond yields, led with the aid of returns at the 10-year Treasury Be Aware, hit a 1-month excessive of 3.17%, suggesting the Federal Reserve will be competitive with fee hikes for the rest of the 12 months in a bid to get inflation as near as feasible to its annual 2% target. The Vital Bank has formerly stated that it became prepared to slow the economic system, if vital, to gain its purpose. Analysts say the Fed would possibly have a tough venture in advance as oil and gasoline charges don't appear to be coming down enough to prevent inflation in its tracks. The oil market is still very tight and the eventual weaker U.S. consumer gain it certainly take effect until towards the give-up of the year, said Ed Moya, analyst at online trading platform OANDA. Some buyers are getting into de-risking mode as possibilities for the economy hold to dim, but nobody in reality desires to abandon the great change of the year, that's oil and power stocks.